Yeah, good morning, everyone, and welcome to morning meeting. What we are seeing that market is is remaining range bound across various part of the world. US market has also seen more of a range bound trade, and futures are also more of a flattish. Whereas Asian markets are mixed with some markets showing positive trend and other are showing negative trend. Uh, Commodities are also seeing again a mixed trend. Oil is down by around $0.5, whereas iron ore is up by around 1%, steel flat. Aluminum is also seeing 1% decline. So overall, no clue or mixed reactions from the international market. Uh, Friday, RBI policy was announced, and RBI kept interest rate unchanged, but reduced the CRR by almost around 0.5%. This will infuse around 1,16,000 liquidity into the system, which was struggling for the liquidity, and as such seems quite positive step. Apart from that, RBI has also increased the upper band of the interest rate for FCNRB deposits. That is NRI deposit which comes into India, wherein earlier the rate was capped by 200 basis point above ARR, whereas now it has been increased to 400 basis point. So India country we had seen recently that rupee was depreciating and depreciated by almost around 100 bips in last few days or few months, around 1 month. To counter that, RBI came up with these measures. So both the major measures seems quite positive, though inflation. RBI has increased the inflation target for FY25 from 4.5 to 4.8 and indicated that even the third quarter inflation will remain high and we will see decline in the inflation from the fourth quarter. So, which can lead to the decline in interest rate from in February month. So, seems like the interest rate cuts is coming in February month. Whereas the growth has slowed down, and now the RBI is targeting around 6.9% GDP growth for current year, versus earlier it was targeting 7.3%. So we are seeing some downtrend in that also. So to counter the declining trend in growth and with the stabilization of inflation in the fourth quarter, we can expect interest rate cut in the February meeting. So for today's, since the clue from the international market are more of a flattish, and we are seeing a lot of new geopolitical tensions emerging in the international market are likely to remain more of a range bound in today's trade. Now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we are likely to witness some range-bound trading sessions. From the last two trading sessions, we have witnessed a very strong pullback rally. Almost Nifty has touched the fate of 24,800 levels, but didn't find a positive closing about the same from the last two trading sessions, which gives some sort of a cautious sign. Going ahead, 24,740 will act as a crucial resistance levels. Any move about that level only will extend the rally up to at least 24,800 to 24,900 levels on the high sides. On the downside, the immediate for today purpose, the immediate support is licensed at around 24,600. any move below that level, we'll see some sort of a profit booking, which might take a Nifty towards 24,540. The view is bit positive only, but we might witness some sort of a profit bookings at the higher levels. So if you're getting any dips towards to 24,500 or so in the coming 1 or 2 trading sessions, can be grab that opportunity to take a long positions. Coming towards the bank Nifty, 54,000 is the first resistance level. Above that level, 54,340, 54,500 can be tested, whereas the support is placed at around 53,370, 53,000 levels. Coming towards the stock specific, RGL looks positive on the technical front. This particular counter is well placed above all the important moving averages. It is currently trading at 189, 190 levels. The stock has given a breakout with a very good volumes, and I believe this momentum is likely to be carried forward towards to at least 195 to 200 levels on the higher side. So one can take a long position at the current market price as well by keeping a strict stop loss of 183. That's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. Uh, on the derivative front, the overall positions are still bullish. We have seen Nifty move up about 24,500 level. The PCR at 24,500 strike has gone above one, which is a good sign. PCR, overall PCR is below one now. After the last couple of days, Nifty saw some consolidation. So yes, this is a good sign. VIX has also decreased, so the indicators are positive. We expect buying to return after the first few hours of today, when Nifty is opening a bit negative. Nifty can reach towards 25,000 levels. The highest call base around that area. Some resistance can be seen at those levels. Yeah, so look out for the same. From the stock specific front, we expect most of the stocks to do well, but banking is one sector we expect this sector to do well going forward. For banking, a lot of private banks have seen long creation, and the PSU banks have seen short covering action. So both are positive, and we expect Bank Nifty to do well going forward. Even oil and gas space, OMCs like HPCL, IOC, BPCL can do well. A lot of shorts have been covered in the last few days, and we expect these stocks to move up from here in the next couple of days can give good returns. Yeah, so look out for the same. That's it from my side. Like to other fundamental team to take over, please.
Thank you, Nirav. Good morning. On Friday, Godrej Consumer filed an update regarding business conditions and performance of Q3 FY25, where it expects company's standalone business to witness flat volume growth with mid-single-digit growth in its sales. This is mainly due to challenges it has faced in soaps and home insecticides category, where both contributes 1/3 of GCPL standalone business revenue. In the soaps category, surge in palm oil and derivatives prices by 20-30% on a YY basis made them to increase the prices of its products and reduce the grammages of key packs. While delayed winters in North and cyclone in South India lowered the demand during the Q3, which impacted growth in home insecticides category. GCPL's rest of the portfolio is expected to deliver double-digit underlying volume growth. However, margins are under pressure due to inflation and expects lower than normalized margin range of 24 to 27%. 27%. So overall, this is negative for the company. Thank you.
Yeah, apart from this, CEAT has said that they are acquiring the off highway tire business of Michelin, wherein the revenue is at around $213 million, and the acquisition cost is $225 million. So almost around one time sales which looks very attractive considering that the competitor Balkrishna Industry is trading almost around 4.5 times sales. So margins and all are not yet known of uh, Kemso, which is a off-highway brand of Michelin, and as such, that will be known only once the company is doing con call day after tomorrow. So overall, apparently looks quite positive for CEAT, considering the price at which it has acquired, and it will be getting at a stretch a lot of new customers and manufacturing facilities. Apart from that, Friday, Paytm announced that they will be selling rights to subscribe to the equity share of PayPay of Japan, and will be getting around 2,364 crores. The news was already published by as a sources by the CNBC. It was there in the market during the trading hour, but it was confirmed thereafter in the evening that the transaction has happened. So the amount realized will be comparatively large and will be a positive for Paytm as well. Yeah. Then Grasim has said that they will be starting the production of 400 ton per day of caustic soda lye. They already has a capacity of around 1000 TPD, and this will add up around 40% to the existing capacity. But considering the market condition right now of overcapacity in caustic soda lye, this will further disrupt the demand supply situation and can act as a bit negative for the industry. So overall, for Grasim, it seems like more of a neutral and no benefit immediately, though long term they can get benefit from that. That's all from us. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might witness gold consolidating from 76,800 to 77,000. Prices are kept around 77,000. And on downside, the support area lies at 76,500, 400. So buying on dips is recommended. One can initiate a buy around 76,500 to 450, maintaining a strict stop loss of 76,200. And in silver, one can initiate a buy around 91,700, which is a support area, and maintain a stop loss of 91,000. On upside, 92,500, 93,000 is the level where one can book profits. In metals, copper is witnessing resistance at 227 on the higher end, and whereas the support area is at 220 to 18, 818. So one can buy around 820 with a strict stop loss of 815. On upside again, 825, 827 is the area where one can book profits. And again, if prices are sustaining above 827, then we might see further rally. Whereas zinc, one can buy with a stop loss of 284, and again on pullback 288 is the level where one should book profits. For trading purpose, one can also sell around 288, maintaining a stop loss of 290. And in crude oil, we might see some pullback till 57.70, whereby one can initiate a sell. Prices are weak below 57.70, so one can sell with a stop loss of 58.30. And on downside, again, we can expect 57 5700, 5650 on downside. So, and in natural gas, there is a gap up opening. So we expect prices to test 278, 280 on upside. So wait for a dip around 268 and maintain a stop loss of 258. So that's it from us. Thank you very much.